The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. I'm just making a quick change here. I want to grab this chart. I want to put it in the middle here because it's just much cleaner. And I'm going to make it INDU, and now we can talk business. There has been a question. Oh, this is the Tiger Technicians Hour, Basil Chapman. My pleasure to be here. I just did Steve's show, so I'm kind of a little discombobulated for time. And but Tiger Technicians Hour is 11 o'clock till noon, and that's when we're talking. And it's my pleasure to be here Monday through Friday on market days. Dow's down 45 at 17,126. The S&P is down 4 at 1990. I've not got traditional sell signals in place yet, but I've actually put down arrows or the equivalent of a down arrow in the charts because everything about what happened Friday, even to the discussion this morning, even to the fact that there are so many people, I've had silence. I don't usually have silence. I usually have people calling me and people in the den asking questions. It is very quiet right now. One of the reasons why I think it's quiet is because, on the one hand, for 5.5 years, every time there's been a market correction coming up, people have said, I'm afraid to shorten, then I'm going to shorten. Every time I short, I'm wrong because the correction lasts just a very brief moment. And the market just goes higher and higher, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher. It was like a momentum burst that has been fulfilled because of the Fed and other factors. But all of a sudden, what we're looking at is something very, very different. The nervousness that I've perceived over the last 3 weeks in folks wanting to short, actually shorting, how they're shorting, what they're shorting tells me that, and one of the reasons why in my opening call, that's my daily services subscribers, we have gone very much to the short side. We have how can I put it? I've got two stocks that are shorts. Both of them are really economic indicators because if the one goes down, it says internationally there's a problem. And if the other goes down, it says nationally there's a problem. And then we've got shorts on the indices. And we added some today. We're very lucky. One was the exact low. Now, what we've done is because I know that there are a lot of subscribers that don't like to actually short, but they are quite prepared to buy an ETF or an ETN, a note, or a financial instrument where they are going to the long side in the purchase, but the actual vehicle is a short-sided trade. It just makes it, it's easier. You don't have to put up your money for your, you know exactly what you've paid. You know exactly where your stops are. Just real easy to, sometimes with shorting, if there's a huge gap up, you have to come up with extra money. Hey, in this particular instance, you're long and you're treating it as a long. Now, I just wanted to get that out the way to explain something that I think is quite going to be very important here. Let me get rid of this chart. This is the busy one, the one that I usually use, but for the Dow, it's busy. For the others, it's not too bad. But in this case, I've taken the one that's just clearer. And what I've done is, in the weekly chart, it's worth talking about the weekly charts. Let me just get this out the way. Dow's down 50 at 17,123 on this 23rd day of September. The S&P is down almost 5 at 1989. They're in sync. The Dow, no, the Dow's a little weaker than the S&P yesterday. It was way stronger. The S&P is down 5, while the Dow is down, 0.25%, while the Dow is down 0.33%. The QQQ series, the NASDAQ trading vehicle, the NDX 100, is down QQQ right there. Oh, I went to the wrong thing. Let me get that out the way. I'm coming back to this chart in a moment. Just move it out the way for the moment. Right, there it is. So the QQQ right now is down 14 cents at 98.90. The 9-period moving average at 99.42 is going to be strong resistance. The weekly chart is going to be fascinating because if the Qs close underneath 98, it'll be the first time they've closed under the 9-period moving average since the week of the 25th of April of this year, where it was down in the 85.90s. That's number one. Number two is the VIX index is showing signs of life for the very first time in ages. Hit a high today of, where did I go? Hit a high today of 1483, slipped down to 1383, trading right now at 1444. And I tell you, in a bear market, remember, I've been making a big deal about this for months and months and months. For a bear phase, doesn't matter whether it's a daily, a weekly, a monthly, whatever it is, a bear phase to really kick in, it means that every bit of news is bad news, and every bit of news is perceived intraday as a selling opportunity. That's the exact opposite of what you have on the way up. And the VIX index has to start climbing, and it has to start getting into the high 15s, 16s, and treat that as a base. Once we've got that, we're in place for a down move in the markets, and that's the way I'm looking at it. Unless we get those two de facto situations every day, you want to see the market, even those big spikes to the upside, fail by the end of the day. You want to see the Dow and the S&P and the QQQ series and the IWM closing, and the New York Stock Exchange closing towards the lows of the days. That says you're now in a bear phase, and then you want to see it hit the weekly charts. Now, the weekly chart this Friday at 4 o'clock, how the VIX response is going to be very important. If the VIX is anywhere close to the 200-period exponential moving average in the weekly chart of 16.92, we're in for a tough time. Okay? Just make it real simple. That starts to improve the weekly chart, monthly chart. That monthly chart has a Chapman wave, lowercase h, that can go to an M pattern. That'll be a huge thing if it even does that. What does that mean? In the Chapman wave methodology, if I go to the H pattern, the lowercase h pattern, I should have these all memorized. Chapter 17, I believe. Let me see. Chapter 17, the dreaded H. Now we just call it the H pattern. That's the pattern that just keeps making these little scallops, these lowercase h's, and breaks the left side low, keeps going lower and lower and lower. If it does that, eventually it can go to an M, lowercase m pattern. That's what we've been looking at in gold and many of the other instruments. Now, if that's going to be the case, what we will see is that it's the exact opposite of what we've been seeing, as the H pattern in the monthly chart of the VIX starts to see a bounce that's going to give that M pattern a rise to the 20.22 200-period exponential moving average. Remember, it's failed every time it's got to between 20 and 21. That's 7 points from here, another 50% higher. So I don't know if it's going to do that, but my eye says real good chance that this is the move that has the opportunity to take it into the high teens, and then we'll see what happens. Okay? Day's young, anything can happen. And what we've got is that gold GCZ should have a little bit of a bounce here. It's tried that early this morning. It could even have a little bit more of a bounce, but it gives it a range between 1238 and 1246. I think that's about the level that it could bounce to. Best case is 1258, 30 points higher. Then we'll see whether it can hold. But the weekly chart and the monthly chart are suggesting the pattern that says that H pattern is going to, a lowercase h is going to an M, and that should be maintained. We saw it back at the high off the top in September of 2011. Was that September? Yeah, September 2011. And you've got that pattern that comes down, makes an H, then it goes to a lowercase m, fails, comes to another H, another lowercase m, and we'll see if it's going to take, if gold takes out anywhere around the 1183 support to 1179 support. That's on the continuous. What is it on the actual contract? If it takes out, yeah, it's about the same. If it takes out 1185, the low of December of last year, that's going to be very negative indeed. That's if it closes under there. They can take it out, but if it closes under there, it's very negative. Okay. Any thoughts on heating oil? Now, I don't know what heating oil is. I just go to oil. The oil, is USO okay? Good question. Yeah, USO, all the commodity type instruments have got this H to the M pattern. Crude oil has just been stuck in a range. And as far as I'm concerned, crude oil, the USO, which is the United States Oil Fund, LP, has a low of 32.68 that it has to hold. It's at 34.49 right now, up 30 cents. And the resistance, I think the resistance is somewhere around 37.20. So like 3 points up, 3 points down, somewhere around that in the range. I think it's stuck in a range. But I can just tell you this, that if the oil stays, if it has a bit of a rally, a bounce right here, and the weekly chart says there is the opportunity for it to do that, but it has to, USO has to get about 35.30. Then what you're going to see is the XAL, which is the airline index, really take it on the chin for the very first time because it's been spectacular. Absolutely, it's making that pattern in the weekly, that's like that M pattern at the very top. And look at the technicals, how poor they are. So I'm watching this real closely. HOX4. Let me go to HOX4. HOX14. Yeah. Okay. Yeah, it's kind of the same thing I'm saying. So 2.69 right now has tremendous resistance at 2.73.5. It's 2.735. Let's call it 2.735, and trading right now 2.6903. And I'm suspecting that the weekly chart still hasn't found a base. No, I think it's going lower. That's really interesting. You would think with all the overseas criteria, just all the stuff that's going on, that there'd be a bounce. Well, the bounce is it could bounce up to the 2.73, 2.74 area. 2.75 would be very strong resistance. But at this particular point, the candle that's setting up is going to be very important. Why? Because the dollar index has gone right down to the 9-period exponential moving average. Isn't that incredible? The power of this 9 EMA. I've spent webinars on it in my Master Trader series. I spent ages of time. This is such an important indicator. That 9-period exponential moving average. Look how it touched it at 84.40, and the low today was 84.37, and now it's sprung back, and the dollar is only down 8 cents. High-level consolidation. It hasn't given a sign yet, except that the MACD is turning down, but the stochastics at 90%. So this is good action so far. Wow. And the weekly chart made a new recovery high yesterday. So it's still in leg C. And look at this. When you're looking at the dollar, it's testing 84.75 was the high. Let's see where it closes. At this point, it's 84.67. The high of the week of the 12th of July of 2013 made a peak F-top, and it made this big U-turn. There's that pattern that we're looking at in the VIX index. Look, comes back down, makes the H pattern, little complex H pattern, retests, goes a little bit lower, and then whoops, starts to move to the upside. That's what we might be seeing. Patterns repeat because they fractals of human emotion. So remember, we're watching things real closely here. Whoop, music coming up. We're about to take a break. I'll be back, Basil Chapman, 877-927-6648. The fact that nobody's calling is very bearish. Come on, give me a call. Make it bullish. I'll hear you from you soon, I'm sure.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I had a question during the break about STAG. STAG is a symbol, trading 21.18 down 17 cents. STAG Industrial Inc. And very interesting because kind of a frightening chart pattern that we're looking at here. Not the longer term has a spectacular move. Just the way it's rolled over from peak F top in the weekly chart, right there. And in the monthly, it's very unusual to go to peak C1, C2. I would have expected that it went just a fraction above the 25.19 high of April when it went to the high in 25.04. 25.04 high in June. In fact, it failed there as the MACD and stochastic were failing as well. And the question is, what would I do? And the answer is, I'd jump ship. Even though it's real close to some kind of a bounce, you should take it for a test at 21.90, the high of the doji candle of the 17th of September, and 21.83 is the 9-period exponential moving average resistance. This is just, it's relentless, the selling. So any bounce says that anyone who's in it is going to say, oh man, this is not good. I'm going to take something off. And every time it bounces, somebody's going to be taking something off. So my recommendation right now is that at 21.18, it is really close to an attempt at a bounce. But what will happen is, what if it goes from 21.18 lower down to 20.40. And it does have the bounce. And the bounce, all the bounce does, it gets back to 21.18 or 21.41. So I'm going to recommend at this particular point, take something off. Yeah, it might be losing some money, but you know what? We always say our first loss is the best loss. Take something off. It just gives you time to say, oh, okay, I'm not beholden to the stock anymore. I've got X amount of money out of it. The rest is in it. I know it's worth 21.18 right now. Could be less. And this is what I would do. If it was to bounce, especially in a market that's just starting down at this particular point, and this one has been coming down 1 to 3 months. Actually, already 5 months it's been coming down since it's made the high. And we've gone to new all-time highs in most of the indices. This is saying that it is, it's got a problem. So I'm inclined to think that if it does have a very good rally, that rally has to start, it has to come in above 20, and it has to very quickly get to at least 22.20. It's only a point higher, but in this case, point lower is easier for it to do than points higher. And 21.83 is the 9-period moving average resistance. 22.14 is the 14-period exponential moving average resistance. I'm getting a sign right now that says I'm getting to a point where I want to have a bounce. So I'd be thinking I wouldn't wait for the bounce. I would definitely take a little bit off right now. And in that bounce, I'd take a little bit more. And if that bounce goes high enough that you can say, I'm going to make the stop, whatever the low is today or tomorrow, whenever it is, in this area before the bounce, 21.16, if it takes out 21.16 after the bounce, I'd say, hey, it's had a fantastic move up. It's changed its direction. The tide in the monthly chart has joined the weekly and the dailies and is turning down. And it looks to me like this wants to test 19.28 to 18.76, the lows of the last year. That's really what it wants to do. That's a lot of points, a lot of percentage in a move like this in this particular environment. So I hope that helps you. Now, I had a question about, let me just see. I want to get to one more question, and I'm going to go to those charts that I want to look at to explain the weekly charts and why I'm looking at this and I'm saying, hey, something's happening here. Now, Apple is trading at 102.13, up $1.07. There are just a handful of stocks that are holding very, very well under these. They're not doing great, but they're doing great relative to the market weakness. Now, I couldn't take my eyes off. I've got, I see Clinton out there talking away. Wow, we'll talk about Clinton another time. Fascinating man, fascinating. The comedian. I always called him the comedian while he was in office. He reminded me of someone who was able to be parachuted down anywhere in the world, who put his finger up in the air, see some people talking, listen for about 2 seconds, know exactly what the point of view is that he should take. Didn't matter whether he agreed or disagreed. It did not matter at all. And then he would espouse that, and he would be looking at that person and saying whatever it is, and then he'd be looking at the other person and talking to them about what they wanted to hear, and both people would walk away saying, gee whiz, that was very interesting. The chameleon. Amazing adaptability, and that's why during his presidency we saw some positive things happen. I'm going to we've got a break coming up. Well, I've moved away from my charts here. Let's go. We'll come back with Apple, and then we're going to talk about the weekly charts of the Dow and the S&P and the Qs and the New York Stock Exchange and IWM. I'll be back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. A couple of things going on here. Yep. Thank you, Max. Wow. All the way from London. So it's a chemical mining company, that SQM. That's very interesting because Eastman Chemical is making a peak E chart, made a peak E chart in the monthly, and weekly is a peak F, and the daily is a peak F. So I'm looking at the chemicals, and this is going to be very interesting. So I had a comment made that about Apple. I think that what's happening here is that fund managers are. That's why we saw the defensive stocks moving higher or holding very well. And I'm going to put Apple in that category. I think Apple right now is a defensive stock, gives a little dividend, but at the same time, it's a stock that has a story behind it, a story that is calculable at this particular point, and there's nothing yet negative about the story that should impact it to the extent that there's major selling from the big institutions, not at this particular point. If you look at a Tesla, That's very different. Tesla's already been in that situation where it looked like nothing could go wrong. Suddenly, it's made a peak F top at 291.42 in the daily. The weekly has an alternate count of F/C. My bias right now is to think of it as an F, and the leg D in the daily in the monthly chart has no real. There are a couple of signals that say watch out, but we haven't seen that decline take place yet with a peak in the monthly chart of Tesla. So we're rotating through certain stocks that Tesla. Apple is a little bit right now like a Microsoft in that it's being treated as old technology doing new things. And as a result, there's this triangle that I'm looking at, asymmetrical triangle. No, it looks like a symmetrical triangle within the up channel. And all I can say is that if you're long Apple, great. I would not do anything about it. I would suggest two things. One is that if Apple starts to take out the low of the 16th, which is at 98.89, I shouldn't say take it out. If it closes below it, it means it's heading towards the up channel inside track, and that inside track says that this had better hold. Why? Because it's held before, and if it starts to fade, you've got that H pattern failure in the daily, and that's the reason why if this this is the long-legged candle that I made a big deal about, and I said, you remember I spoke about this, I took it away the other day because it was just too much information. That rectangle that I've just drawn, let me see if you can see it in Tiger TV. That rectangle, there we go. That rectangle is saying that we should, remember I said we should trade within this rectangle, that there's probably a limit to the upside between 103.08, which is the high of the candle of the 9th, the wick, a long wick, and 103.74, which is the all-time high at peak E with the doji candle in the daily. And the downside says that if it was to take out and close underneath 96.14, I would not be heavily long Apple. I treat it as a stock that is starting to fail, and I'd have to think about it as to where would support be rather than where would resistance be. Let me just make it clear. As it stands right now, if you're long and strong. It's looking very good. The 120-minute chart, I looked at this last night, went to A, B, C. I'm waiting for the D, and it has an inside A, B, C, 1C2. This is going to be really interesting. There's that. Oh, I knew I drew the rectangle. I drew it in the 120-minute chart. There it is. So that's consistent. And it says this area here of 103.08 within 30 cents or so, within that area, that's where you've got to be most careful, because if it turns around and starts coming down, then it's going to probably try to revisit the lows between 100 and 98.90. And if it takes out decisively the high of 103.05, really good action that says Apple is a stock that is still being accumulated by the fund managers, and it's acting very well. And there are always a couple of stocks under all conditions that act well, and Apple will probably be one of those stocks. Hope that helps you, Chris. And the other thing I wanted to mention also is that the monthly chart of Apple, this U-shaped pattern, it's going to be very interesting. October makes it really important. How Apple comes out of October, if it closes under 90, it's actually going to be a big negative. And if it closes nicely in the 105 to 109 area, it's going to say, man, Apple is telling us something that is amazing in the high-tech industry. So those are the parameters I'd be looking at. Now, if you're holding Apple for the very long term, I don't even know if I want to tell you to get out if it pulls back under 96, because this is still one of the premier stocks. And the pattern I'm looking at in both the monthly and the weekly says the big test comes at that 96 area. Until it even gets close to it, don't even think about it. So I hope that helped you. And I wanted to do Apple because 120-minute chart on Microsoft was the question. Yes, I hope it helped you. And let's see what's happening here. Microsoft is going to peak A, B, C, D in the 120-minute chart after making a peak E top at 11:30 on the 12th of September. It says that it's holding well, but this pattern is the pattern that I'm really I do not like to see this pattern. Actually, I should not have put the arrow down there because Microsoft did not close underneath. It's just a red plus sign. Did not close underneath the 9-period moving average. And the MACD's okay. Stochastic's good at 88%. I'm going to go with this interpretation right now. I'm putting in an F. Whenever I have an F, it says, please consider that you might want to put a down arrow. If you don't put a down arrow, it says it could go to a G or recycle. And in this particular case, all I'm going to do is I have no choice but to put F/B. I'm putting the B on top because it might have recycled. But my thinking right now is that if Microsoft at 46.85 closes under 46.20, closes under 46.20. Oh, to be safe, let me say 46.10. That's going to be a peak F top in the daily, possible peak F/D in the weekly, and a leg F in the. You can see why I'm getting a little cautious around here. That's not to say we have to crash, but it does say that over the next few weeks we'll have a high-level consolidation in many of the indices, and that to me says the upside might be very limited. And that's the way I'm treating this particular market. So I hope that helps you. Now let me go to this. Okay, now I want to get back to the chart formations. The weekly chart, I'm going to put this one back up here to show you. In the Dow chart, based on the Chapman wave methodology, I really have no choice but to say that that was a peak D at 16,588 on the week of the 3rd of January of this year. And there was a second doji called the silent doji in the Chapman wave methodology. There was a third doji, the third week, and that's the week of the 17th of January. And then plop, you go straight down and you hit that trend line channel inside track support level at 15,340 on the week of the 7th of February. And then it goes peak A at 16,505. It goes to peak B on the week of the 4th of April at 16,631. It goes to C the week of the 16th of May at 17,735. And then it goes to a D at just nominal. It goes 16,970.17. It goes 16,978, just 7 points higher the next week. And then it goes to 17,074, week of the 4th of July. And then it goes to 17,063 until finally, so what we've got here is 74 to 63 makes peak E, and even was a recycle, and you went to an F/B after that at 17,151.56, week of the 18th of July. Even if you did that, called it a recycle, you couldn't call it an instant restart because you plunged down to 16,333. I have to call that a brand new buy mode on the week of the 8th of August at 16,333. So now you've gone peak A, G/AY. I called it that because you never went under the start of the move from the 7th of February at 15,340. But at the same time, you've now gone to leg B. Well, the Chapman wave doesn't go to an H. It only goes to a G, and then it has to either you've recycled or you've restarted. Something is going on. So I have no choice so far but to call this B at 17,350. The implication is that in this particular pattern, you should not go under the low bar that started the move up. They gave you the buy signal, and that signal says 16,333 should be held. And that says we can drop 800 points. But if we break 900 points, if you go below, you don't have to close, you just have to go below 16,333, that's a real problem. And that says that's very unusual. But here's the issue. On the S&P, SPX, and here's the question, because one of our dentists who studies price movement so closely that he checks up on intra-day and intra-week prices to see, knowing that peaks are very important and troughs. And he has a different interpretation. I have to go with TradeStation, but he has that the high that was made the week of the 4th of April at 1897.28 in the S&P cash, the index, the 500 index, wasn't there. And if that's the case, then 1891.31, 18. Aha. If that's not the case, 1859, I need to know what the price was that you had. What was the price that you had the week of the 4th? That's the question I have. Why? Because then there could still have been a leg D, a peak D, made the week of the 2nd of May at 1891.33, because the next week was 1889.07, fractionally lower. And then we're back where we started, exactly. So I need to know that. Actually, we're not even back where we started. Then it's A, B, C, D. Could be E, F. Okay. Now, this is what I want to discuss. This whole preamble is really based on this pattern here. Some of you know that in my work, especially if you've taken my courses, I often talk about the double hump, the double camel hump. You know, there are some camels that have single humps, and there are some camels that have 2 humps. I'm a very visual person, so my looking at this says that the stochastic, just as it did in October of the weekly chart of October of 2008, when everyone had given up and said that the Dow, it was all over, they couldn't understand how we rallied. But my work said we've got the pattern, this double hump pattern that says there's just enough energy for 2 peaks to be made on that right shoulder of the M, lowercase m formation. And if that's the case, that's where you got to get really careful. So here's what happened. When we went to the high this past week of 2019.26, look what happened. I wonder if I'm going to try to make this as big as I can. Here we go. There we go. You see this MACD? It's made a little bit of a turn up, but it has not crossed positively yet. The differential, the 9-period differential, the green line, the fast-moving average, did not cross positive. And look at the stochastic. It went up and down, and the on-balance volume went up, made a peak, an inverted V shape, and then did another one, slightly higher, confirming that move. So you've had mixed results, and that says this could be, in fact, what I always look at as an E or an F as and G as the coda to a move that happened earlier on that just hadn't quite finished. Wow. And let me try to articulate that in English here. Sometimes you complete a move and you come down, just as we did on that doji candle on the week of the 25th of July at 1991.30. Now you come down sharply, which you did. And then you at 1904.78 in the week of the 8th of August. Then you start a brand new move. But the move down the week of from the high of the 25th of July was not accompanied by strength when it rallied in the MACD. It just failed to do that, and that's a negative. The stochastic did continue rallying and then was going down when in fact it made the high, all-time high of 2019 point whatever it is, 26. So that says that what happens next is really important, because if you take out, you don't even have to close, you just have to take out the low of 1978.48, and that's going to say, uh-oh, bad news, you're coming back down. And all you have to do is take out the high of 2019.26 to say, there's still residual strength. That's how simple this particular move is. But as you're trading it, I have to do other things, and I have to use the weekly chart. Now, if you look at NYA.X, that's the New York Stock Exchange. Let me just go there with a notated chart. NYA.X. Look, I've got a V-shaped formation. That V-shaped formation with the terrible technicals says, at least in the short term, you should be coming down. Look at this. Right there. Look at the high at 11,105 in the New York Stock Exchange, and look at the 2 points high at 11,107. Look how bad the technicals were. I'll be back and we'll follow this a little further. Don't forget, the next hour is Chad Coker with the Options Hour. Think or Swim. It should be a fabulous hour. Perfect timing for this. I'll be back. Dow's down 30, S&P's down $1.98.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, I need to do this real quickly. Berkshire Hathaway, I've discussed this as one of the really important stocks. To me, this is an A. Where's the A then? Oh, there it is. There's the A. So this is, in fact, peak D that was just formed. Is holding the 9-period exponential moving average. The A shares at 139.64, up 38 cents. But the technicals are starting to fail in the daily. The weekly is still very strong, and it says until or if Berkshire Hathaway, BRK.B is the way I get it, closes under 135, 136.13 is the 9-period moving average, which it looks like it might want to do. it's going to have a high-level consolidation. If it closes under 135, let me say 135 to 134, that 1 point makes the difference, because if it breaks under 134, that's only 2 points down, to a little bit. It's going to start impacting the monthly chart. And the monthly chart, I have it in leg F. See, a lot of these things are going to have to recycle on any pullback here. So my thinking right now, okay, let's get to the nitty-gritty of the question. So Berkshire Hathaway, holding well in the weekly chart, holding really well in the monthly chart. The price is the most important because price dictates trend. If the price takes out 135, closes under there in the 134 to 133 area, that says, okay, at least a short to intermediate term top has been made in Berkshire Hathaway. Any push to 140, we say 139 right now, push to 141.20 or higher, says, you know what? I've still got internal strength, and my sectors in the economy are doing well. That's what I'd say. So let's do this before we go to Chad. Options hour. Don't forget, go to the front page of TFNN. Wow, if you are at all interested in learning techniques and being able to trade the Nadex platform and win a great deal of money and get the den free, those questions, a lot of them are coming from the den. A lot of information is coming from the den. Check it out. Go to the front page of TFNN. So let's make this real easy. Going right back to the VIX. VIX is trading at 14.07. If and when the VIX goes into the 15.5 to 16 area, this market is going to have a really hard time holding strength. It's going to give it up, and it's going to give it up methodically. In the rotational correction, you're going to get a rotational, I don't know how to explain it. I've got a visual picture in my mind. At the bottom, you get... Just let's call it a rotational correction for now. How selective, that's what I wanted to say. How selective the rotational correction is going to be really important. The VIX index on Friday at 4 o'clock, if it's in the anywhere close to 16.92, that's the 200-period moving average, that's going to be really important for the trend. Meantime, back at the ranch, my opening call, we are, in fact, short. This is the shortest we've been in a long time. Yes, there are a couple of stocks that are acting well, like Apple. I'm preferring to just try to stick with what I see as potentially weak and getting weaker. So that's the way I'm looking at it. Now, let me just do this. The Dow, numbers to look at between now and tomorrow. If the Dow closes on the day, it's down 32. If it gives it up, like bear markets tend to do, they close towards the low of the day. All those rallies are intraday. But fund managers are starting to get out at 3 o'clock, so they should close low at the end of the day. If it's still got residual internal strength, you'll close towards the high of the day. We'll close maybe up 25 points in the Dow, up 2 to 3 points in the S&P, up maybe 7 points or so in the comp index. It's already up 2. It's a good sign. So I'm looking at this and I'm saying make it real easy. A Dow closing at the low of the day is a very negative thing because it'll be the first time that it's closed under the 9-period exponential moving average since it broke above it on the 16th of September. And that gives you the pattern that I call the Eiffel Tower. Straight up, straight down, looks like the Eiffel Tower, like an uppercase A pattern. Whoops, whoops, whoops. So that would imply that tomorrow we're going to test 17,050 if we close towards the low of the day. So closing towards the 17,170s is not bad. And the VIX index, watch the VIX. If it starts to move towards the high of the day as the market pulls back, that's bad news. Hey, folks, have a wonderful day. I'll be back tomorrow, and stay tuned for the Options Hour with Chad. Be right back Wednesday morning.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.